Okay, welcome everybody to our my boot camp training on Saturday. Do this every Saturday. Okay, so you can see my screen.
Yes, sir.
Okay, very good, very good. Okay, so 12 o'clock. Yeah, 12 o'clock Saturday. Every Saturday, I do this training and put it on my YouTube channel so that the masses that want to learn how to trade the Forex market, the indices, um, you know, anyone that wants to learn how to trade can take these ideas, these concepts, these strategies, this training, and apply it to their trading plan, their arsenal, to help them become not only an effective trader, but a profitable trader as well. Okay, so I'm going to jump into some information here that'll help you guys become not a beginner trader, but from a beginner trader to an intermediate trader. Okay, and I'm going to also invite you guys to be part of the academy that I'm actually teamed up with. There'll be a link in the description to click on that academy to learn more about it. That way, if you're a beginner trader, you want to get into the academy and learn the beginning strategies, and then jump on my trainings on Saturday to understand exactly what I'm training on. So that'll propel you from not only a beginner trader to an intermediate trader, and eventually one day, because this does take time, you turn into a professional trader. Okay, but let's look at some information. I'm going to jump into the content that I want to share, teach. Uh, Definitely pull out your notebook and your pen, take some notes. You'll have an opportunity to rewind the video. This is a great thing about video. You can always rewind the video to, watch it again and, go over your notes that you take during the session. So, and again, if you want to jump on live, it's every Saturday at 12 o'clock. But if you can't catch the live event, you just catch the recording and leave a like, a thumbs up, and also hit the bell button. That way you get notification when I do these trainings on Saturday. Going forward, next week, I'll probably be doing a lot more videos. My goal is to do at least 3 videos a week. This has been one a week, but look out for these new videos that I'm going to be sharing with you guys in the upcoming days, weeks, months going forward. So, so let's jump in. Let's jump in. Let's get right into it. So what I want to talk about is trend. Okay. We want to identify what trend we're in, like uptrend or downtrend. We're gonna go over market structure. How do I identify market structure? Order blocks. Okay, we're gonna identify order blocks and fair value gaps. Okay. So what do I mean by market structure? Let's go over that first. Okay. So if I take my tool here, we need to understand market structure. Okay. First, we have a downtrend. Okay. This is what a downtrend looks like. And then we have a reversal. It starts to become an uptrend. Okay. So, understanding trends, right? So when you see something heading down, you already know that's a downtrend. Okay. So that's the first thing you notice when looking at this structure here. Okay. Then all of a sudden, it reverses and gives you an uptrend. Okay. This is called market structure now, right? So, where in this structure can you identify the change in the trend? Well, let's take a look at that. I'm going to take up my box here. Okay. Now, this pay close attention to what I'm about to share with you, because this is going to help you identify if you're still in the same trend. Because what happens is when people don't use this tool that I'm about to share with you, sometimes you think you're in a downtrend and you're not. Sometimes you think you're in an uptrend and you're not. So let's take a look at this. So we're going to take the most recent lower low here. We're going to take our box and bring it to the lower high. Okay. We're going to stretch it out to the recent lower high. Okay. This box, if it's never broken, right? Meaning when you see this over here, right? Because right here, it retraces back, right? It retraces back, but it never broke the box, right? It never did one of these numbers. Okay. When you create your box, that tells you that, you know, from the lower low to a lower high to another lower low, because this low is lower than this low. Okay. So you're still in a downtrend. Okay. Now you could pretty much do one of these numbers, stretch it out, and see how far back did this particular area did this pullback go to. Okay. Sometimes it'll pull back to 68.8, right? When you look at your Fibonacci tool, if you see a pullback and it goes right here, then it's going to continue its journey to go down. But the minute it goes above this box, that's a reversal. So you'd be looking at a change in the trend. But if it stays within the box, you can anticipate it going lower. Okay. Because one of the things I found out is this: whenever the market, okay, creates a lower low, it needs to pull back. Okay. So what do I mean by that? So if we take, let's see, looking for a specific tool here. Right here. Okay. So we have a low here. Okay. And then we have a low here. So this low is lower than this low. Okay. And then we have a lower high and a lower high. This lower high is lower than this lower high. Okay. But we're still in this box. I'm trying to erase this. Go away. Why is it doing that? Okay. Hold on. Okay. All right. So, but we've created a box around this area. Okay. Now, what happens is that whenever you have a lower low, it pulls back and makes a lower high. Then it comes back down and makes a lower low. So this low is lower than this low. Okay. Now, it pulls back, makes a lower low. So whenever you see the market making a lower low, do not get in on the bottom of the trend. Get in on the pullback of the trend. Okay. Because again, like I said, even though this is a lower high, which is lower than this lower high, it never pulled back to go above the box. So you're still in a downtrend. Okay. So I'll repeat that. As long as that candle does not go above the box that you've created, you're still in a downtrend. Do not take buy orders. Do not place a buy order. Do not think you're bullish. You're still in a downtrend. Okay. Now, the box now, when you have a lower low, has to move to the most recent low, to the most recent high. Okay. It has to move because now you've created another lower low. Okay. So the box has to be readjusted. And you go to the most recent lower high and the most recent lower low, and you continue with this box. Then if you have another lower low, you do it again. You go to this lower low, you pull it out to the most recent lower high, okay? And that tells you that you're still in a downtrend, right? Still in a downtrend. Now, reversals happen when you have a change in structure, right? So all of a sudden, it stopped here and it started pulling back up. But look what happened. This particular candle, okay, structure is now higher than the box. So we call this a change in structure, right? Change in structure. And then it never really pulled back below the lower low. Okay, so now we're gonna, it's a change in structure. So now we're gonna see that this is, since this is a change, right? It's a change here. We have a higher high, okay? And then it pulls back, it makes a higher low, right? Now, when you see this, okay, when you see a change in structure on the downtrend, it's going to be going up now, right? Because this particular high broke this particular lower high, okay? Once you identify that, right, you're going to move your box to the most recent high to the most recent low, okay? So this is your most recent high. This is your most recent low, okay? Now, within this particular area here, you want to identify where your order blocks are going to be. Because typically, there's going to be a candle here, and you're going to put an order block on the bottom of the trend, and there's going to be a fair value gap as well, okay? A fair value gap is where two candles, okay, two candles do not meet. Let me draw that out. Okay, so let me do this. Let's say this is candle one. This is candle two. Okay. Now, if the wick, right, because usually there are wicks, right? Let's put a wick here, going up. And one going down. Let's say that this is wicks. Probably did a better job, but you understand what I'm saying. Now, this particular candle, between this candle and this candle, I'm going to put a wick here. And a wick here. Okay. But as you can see, between the two candles, take this tool over here, you'll notice that there's a gap. This is called a fair value gap. Okay. Whenever you see two candles like this, and it never came all the way down to touch the candle's body or even touch the wick, you have a gap in between two candles. That is called a fair value gap. So what happens is the market, what it has to do in its climb to go to higher highs, when it creates its higher highs, higher lows, higher highs, higher lows, higher highs, you'll notice that it'll pull all the way back. I'm pretty sure you guys seen this, but then it touches this fair value gap and then bounces off of it and continue its journey going up to make what? A higher high. Okay. All right. Because it needs to fill this gap in order to continue its journey to go upward. You'll notice these gaps on a downtrend and also on an uptrend. Okay. But understand this right here, if this is a fair value gap or even an order block, because you're identifying that this is the low of the market. Let me erase this trend. Right? It's this. If this is an order block or fair value gap, it will pull all the way back down, touch it, and then continue its journey upward to make a higher high. Okay. We're going to take a look at that in the market so that way you can identify it through back testing and so on and so forth. Because this is what you want to look for. Okay. If you miss getting into the market when it starts peaking higher, you want to wait for this pullback to happen to fulfill the gaps that the market leaves behind. Okay. And then once it makes this higher high, because it's going to, you want to enter the market here and wait for it to make a higher high. Okay. And then once it makes a higher high, you move your box to the most recent high, to the most recent low, right there. Okay. Now, what happens is if the market never comes back down and breaks the low of this box and does this, okay, if it does this, it's a change in structure and you're looking for down orders, sell orders. But what happens is why a lot of people get fooled is because they'll see something like this. They see that the market's trending lower, right? And they think because the market's trending lower, it's a downtrend that's happening, right? So the market will do some of these numbers here, some of these numbers here, and then fall short of breaking this area here because this is your box. Remember, this is your box. It'll come all the way down, maybe even get really close to the box here. And you think, oh, the market's going to trend lower. Nope, it's not. If it never breaks the low of your box, you're still in an uptrend. Okay, that's why you always want to stay in the trend that you're in and not get fooled. Because what happens is, as you can see, it made a higher high, right? And once it made that higher high, what do you think is going to happen? It needs to pull back, right? It needs to pull back, right? Okay. Now the pullbacks are pretty much what pullbacks really mean is that it left some orders behind at certain areas of the market. So it needs to pull back and pick up those orders. A pullback can also mean that the market makers, okay, is looking to stop people out. Because typically what happens is when you get into the market, let's say on this pullback right here, okay, let's say you got into the market. Let's see if I can find that tool again. Okay, let's say you got into the market. Right here on this pullback. All right. And you set your stop loss below, right? Below the pullback or below your entry, say right here. You set your stop loss right here. What the market makers want to do, they have to make money too. So understand when you place an order, right, there's a spread. The spread between the bid and the ask, okay? There's an asking price, there's a bid price. The spread is what the market makers make. Okay, that's how they make their money. So that's why whenever you get into a trade, it's negative because they have to get their cut up front. Okay. But what happens is when you place a trade and you place a stop loss below your trade, they need to come back and collect all those stop losses or stop people out. Okay. So they can get you out of the market and earn their commission for the day. Okay. That's why it's really important to set your stop loss further enough away from your entry, maybe 20 pips away from your entry. That way you don't get stopped out. Okay. So understand that. That's really important. Okay. So instead of placing your trade, see, when it pulled back here, right? What did it do? It stopped you out. You're stopped out. You're no longer in that trade. Now the great thing about it is you didn't blow your account because you set a stop loss. Okay. So that's why it's important to always have a ratio of how big you want your trade to be. Okay. A 1-to-2 ratio, a 1-to-3. Okay. Because if you would have got out right here, you wouldn't have to worry about this pullback. Okay. So it's always good to get into the trade on the pullback, buy low, sell high. It's really important. Okay. Buy low, sell high. Okay. Now let's jump into the candles. Let me erase all of this. And we're going to take a look to see how we can apply what I just shared with you onto the charts. Okay. Now this is a NAS 100. So let's take a look. We'll start over here. Okay. So what are the first thing we see? Now, this is a tool that I use to tell me what trend I'm in, right? Red means downtrend, green means uptrend. This is an indicator. So you guys might want to write this indicator down. This indicator is called, okay, moving average colored EMA/SMA, right? Repo 32. So look for that indicator, make it one of your favorites. There's over 10,775 people using this indicator. So it's a really popular indicator. So you set this indicator onto your chart. Now, as far as you want to go into the tool, right? You want to adjust your indicator, all right? And make the EMA length 8 and the SMA length 21. So take a screenshot, write that down, put it on your notes. Okay. So what happens is this particular indicator tells you what trend you're in. So you're never going to be trading against the trend because you know what trend you're in. Okay. Red means you're in a downtrend. Green means you're in an uptrend. Okay. Now there is going to be crossovers. When the trend is about to change on the bottom, you'll notice that there's a crossover between the two lines. Let's look at the bottom of this. Okay, so we have the red and we have the green crossing over the red for a reversal, and now you're in an uptrend. So now you're going to know what trend you're going to be in with this particular indicator. Excuse me. All right, now the further it is apart, it's a strong uptrend. But as it starts to squeeze and get closer to each other, anticipate a change where the red goes below the green and it changes into a downtrend. All right, so now let's take the indicator off real quick. Okay, and let's take a look to see what I was talking about. So we have a downtrend right here. We have a downtrend right here, right? Downtrend, you put sell orders. Okay, if it changes, if this is a trend line, if it moves above the trend line, you sell. You can do buy orders over here, sell orders over here. Okay, now remember the boxes. We have up, and it came down. I mean, this is a lower low. This is a lower high, and this is a lower low, lower high, lower low, lower high, lower low. Okay, now we have our box. We take it from the most recent lower high, pull it out to the recent lower low. Stretch this box out until you get to the next lower low. Okay. Once you stretch this box out, you know that you're in a downtrend. Do not place any orders going bullish. Stay inside this box and wait for a pullback. If it never breaks the trend line and it never goes above the box, above the lower high, you're in a downtrend. Okay. When I understood what this was, I now understand that I could actually take trades that is going in my favor. Okay. All right. So that's a very powerful tool that I just shared with you right here is it's creating this box and understanding that you're still in a downtrend. So no matter what the market does, if it never goes above the box, okay, you're in a downtrend. So you can do whatever it wants in a box, but it doesn't break the box. Okay. Now, but you have a lower low right here, right? Because this low, okay, now this might be a two-part training, but I'm running out of time on my recording. So this particular box was broken right here and created a lower low. So now we're going to move it. We got to go to the most recent lower high, okay, and stretch the box out to the most recent lower low. We're still in a downtrend. So you wait for a reversal. You get in on the reversal. Okay. Now, if you want to take your Fibonacci tool out, you pull this from the lower high and you stretch it all the way down to the lower low. Let's do this. Okay. And you'll notice that it pulled all the way back to the 61.8, anywhere from 50 to 61.8. Okay. Now, my Fibonacci tool, this is the settings real quick. I'm going to show you the settings so you guys can copy my settings. So take a screenshot of this and copy my settings. Okay. Or pause the video. So your Fibonacci retracement tool, it's located over here. Fibonacci retracement. Copy those numbers. Because the Fibonacci, whenever you see these lines on a downtrend, it'll bounce off on any one of these lines and go the opposite direction for downtrend. If it breaks the 100, you see the 100 is way on top, it's no longer a downtrend because it broke the box. Okay, so let's take off this real quick. Now, it's still in a downtrend, but what happened? It made another lower low, a lower high, and another lower low right here. But what did I tell you guys? If it breaks the box, which it did over here, you're no longer in a downtrend because now you have a trend line. You notice that it's above the trend line for buy orders now, but it broke the most recent lower high. All right. So they did it right here. Now you have a reversal happening in the market. Okay, you have a reversal in the market. Now, this box, but what you want to look for is the order blocks, right? Where do you put the order blocks? Because it's got to come back and fill the order blocks. Let me put that back on, right? Here's a gap. There's a gap between this candle and this candle. These two candles did not touch based on the wicks. So we do one of these numbers here, right? That's your fair value gap. Okay, now your order block is on the bottom always. It's always on the bottom. That's your order block. All right. But the fair value gap says the market needs to pull back and fill this gap in order to go up. But sometimes it doesn't. That's why it's not 100% foolproof, because it did pull back, right? And if you had put an order here, let's say a buy limit order, you wouldn't have gotten into the market. But if you pay attention to what's going on in the market, you'll notice that it did pull back eventually and then continue its journey upward. Okay. And then you see another order block. So if you would have missed that order block, you see another order block right here. And what did it do? It came back and touched that order block and continue its journey higher. Isn't that amazing? Absolutely amazing. So when you see two candles, really bullish candles going up, and there's a gap between two candles, right? 1, 2, 3. The second candle is the middle candle, but the first and the third candle did not touch. You see what I'm saying? There's a gap there. If you look at the wick, there's a wick here and a wick here, but it did not touch. This is a fair value gap. So you wait for the market to come back to your fair value gap, and then you start looking for buy orders right here. Okay. Now, as far as your box is, because I'm running out of time with this training here. Now, your box, remember, your box has to change, right? You have to go to the most recent low, which is right here, pull it up to the most recent high, which is right here, right? And then it goes up, right? Makes another higher high right here. Move your box to the most recent lower high or higher high or lower high, whatever how you want to take a look at it. You put it right here, right? Then you move your box again. Every time you have a higher high, you got to move your box and go to the most recent low, the most recent higher high, which is right here. And as you can see, it broke your box, right? It broke it right here. But understand, we're in an uptrend, okay? Understand we're in an uptrend, okay? Because remember, you still got that pullback. It's got to pull back, and then it's got to create its journey. So if you look at it again, look at your box. You have your most recent high and your most recent low. Still in an uptrend. So no matter what the market does, if it never, breaks this box, you're in an uptrend. You're in an uptrend. This is based on a 1-hour chart. Okay, you can find that in every time, 15-minute. Now, if you're a scalper, you want to place your trade in the 15-minute, 5-minute, 1-minute. Analyze the 15-minute chart, place your trade in a 1-minute chart. If you're